Hello everyone again, welcome to this new supply and demand weekly analysis for the Forex and indexes for the 20th April 2020. This is a trading disclaimer. You can pause the video and read it at any time. Okay, as always, let's start with the dollar index. This week we have lots of imbalances, but no retracement to high probability ones this week. So waiting patiently for new imbalances to be created as a reaction to some impulses and higher time frame areas of imbalance before trading. This happens sometimes, and we're just waiting for price to pull back to the levels we want to trade. On the dollar index, we've got on the 6 months bearish engulfing pattern here, 3 month supply in control, monthly supply in control, weekly supply in control. Shorts on years supply, price did not retrace to that area supply, but this one is a little bit tricky because we are having this high wave candle on the monthly. And as you can see, as I explained in previous analysis, we have had demand created and eliminated and supply created and eliminated. That means that the weekly is out of alignment. Anything can happen. And look at this, bullish impulse, bearish impulse, and price is bouncing back and forth between these two areas of demand and supply. Okay, so right now, a little bit tricky on this one. We've got a 4-hour area of demand with daily bullish engulfing pattern and daily demand in control, but price did not retrace. That could have been a trade aggressively, but it's not the kind of setup that we want to trade. And on the euro dollar, we've got the same scenario, but upside down. Same thing. Bullish engulfing pattern on 6 months, 3 months area of demand in control, monthly demand in control, so long bias. Bullish engulfing pattern on the weekly, but like I said in previous analysis, supply was created, demand was created, and both of them were eliminated. That means that weekly is consolidating. We're very low in the 3 months and monthly areas of demand, very low in the range, so longs of new areas of demand are created. We have this area of demand here that is trying to play out a little bit, but tricky scenario. Tricky scenario. So not touching this one until a more clear scenario is provided. On the Aussie dollar, we've got a monthly downtrend, 3 months downtrend, 3 months, monthly, 6 months, weekly downtrend, almost within that weekly area of supply where short will be possible again, but no set and forget, we need new areas of supply in order to go short. On the Aussie CAD, we've got the 3 months down, monthly down, supply in control, weekly supply in control. This is an area of there nested, but we cannot set and forget. Basic structure not good. Same thing for this area of supply, as explained in previous analysis. Was nested here within the weekly area of supply. The weekly area of supply was under attack, and this one didn't provide 2-to-1 imbalance as explained in previous week. So we want new areas of supply created over here, ideally in the daily, because we have the weekly and monthly areas of supply in control. Look at this area of supply created on the 4-hour that hasn't been eliminated. It was very poor, only 1 ERC as departure. So right now it's not clear that Aussie CAD is going to drop anytime soon. It could, but not now. Maybe if we get these lows broken on the daily and the 4-hour, price will drop strongly and create a strong area supply over there. But right now, nothing like that is happening. So waiting again on this one. On the Aussie yen, we are expecting a bigger retracement. We have 3 months downtrend, bearish engulfing pattern confluence, monthly downtrend, monthly at the short of the monthly area supply. After a very strong sell-off here, we're expecting a bigger retracement. That's why we need confirmation to go short here. Not only that, because that's only a bearish impulse and there's nothing to set and forget over there. So waiting for price to rally higher or hit these areas, confluences, and from there, new areas of supply being created. Aussie Kiwi all-time lows. This could be a fake out. Very tricky scenario. Every time price reaches these areas, it rallied strongly. But every time that did that, it couldn't print a higher high. There are like highs, lower highs, lower highs, lower highs. So it's trying to break lower. It did. Eliminated the use up area of demand on the 3 months. We've got here the classic support with bullish pink candles. We said no short at that area of supply. It was explained when price was there for weeks. Control longs were possible, but no retracement happened on the way up. Why wasn't it allowed to go short there? Because, as explained in previous analysis, this is just a reminder. First of all, the weekly area supply only had one ERC. Second of all, we were waiting for price to rally higher after breaking lower over there. Third scenario here, third thing to pay attention to. We had a bearish engulfing pattern here, but the bullish impulse was stronger than the bearish impulse. Look here, the month started here, went lower, then rallied higher, and by the time price was there, it was like maybe 10 days of the monthly candle. So that told us that the monthly bullish impulse was way stronger than the bearish impulse, and that is why we were not allowed to go short there. And if we take a look at the daily time frame, that area of supply was weak because it was tested on departure over there. So not set and forget we're allowed. Now we've got a daily area of demand, daily uptrend with a weekly out of alignment. So longs could have been nice over there, and now it's not that serious, that high probability. Why? Because this is, unfortunately, we've got the month is still in a downtrend, confluences over there, and this is very common to see. It's very common to see in a counter-trend trade a very strong impulse that breaks opposing supply, fakes out, and then drops all the way down to the origin of the move. So not only that, if you take a look at this daily area of demand here, when price retraces over there, the last bullish impulse here, engulfing pattern, no set and forget longs over there, obviously. Even if we wanted to, that's the price action we have within that bullish impulse. Only one ERC, this is not demand, so expecting price to drop further. So this is unfortunate because we were waiting to go long, counter trend and all that, and now that we have a potential long, then it's negated. But well, what can I say? That's the way it is. So longs will be high probability at the bottom over there because we've got a weekly average demand with a monthly bullish impulse potentially. 3 months, engulfing pattern, fake out, bullish pink candles, and every time price hit those areas, it rallied. So let's see what happens. As you can see, it took me like 3-4 minutes to explain the whole scenario. So when it takes so long, it means that we've got a problem. Okay? So as you can see here, on the new weekly demand, here we've had an area over there, faked out and then rallied. Same scenario happening over there. Here we've got another one on the weekly, okay? Rogue, and then we've got another one over there. It was tested. So we have historical data that tells us that in these areas, every time there's a weekly area demand, it sort of plays out. It's faked out a little bit. If you protect it correctly, then you've got a winner, there you've got a winner, and this could be another one. But every time there's a strong impulse, the price retraces to the origin of the move. Hope that helps you a little bit. On the CAD yen, downturn of 6 months, monthly, and all that, but we've got a very strong bearish impulse, expecting price to rally higher. And as explained, for some weeks, as price was over there, we were saying no, with this bullish hammer, no shorts are possible. So potential counter longs. We've got a daily area of demand. We've got now another brand new area of demand on the 4-hour. So we've got potential areas of demand on the way up two. First, the weekly bearish confluence where short will be possible in confirmation, or at the weekly area supply nested at the monthly area supply where short will be possible. Euro Aussie. We've got 6 months, 3 months, monthly supply almost in control. Very strong bearish pink candle, so short would be possible. Counter trend. But now we've got a weekly area demand. Longs are possible and new areas of demand on the daily and 4 hour. We've got daily bar overextension here. We've got a 4 hour area of demand that has gained control. Have drawn the low. Sorry. So we've got a 4 hour area demand, which is pretty strong as confirmation of this weekly area demand and 20 MA confluence. If you are long on this one, this is a little bit aggressive because of the bullish impulse. We have daily engulfing pattern on the daily, but this strong bearish impulse and all that, this could be eliminated. So if you are long on this one, protect your stop loss at least to half of it to avoid a loss, and be aggressive managing this trade because it's a little bit aggressive. I have drawn, this is the origin move, the lows over here. Okay, so just when I have got the impulse like that, I usually take we have to take the highest or the lowest low here as the impulse. So it's a very little bit tricky on this one. Like I said, high probability longs, lower. On the EuroCAD, we have 3 months supply and control, monthly supply and control, weekly supply and control. What I'm going to say, no longs allowed. We've got daily areas of supply created 1, 2, 3, 4, 5 bearish engulfing patterns with a lot of room for price to drop all the way down. So short on the way down, confirmation for longs of the 50% retracement, 20 MA confluence, new areas of demand on the 4 hour, but still not there. Euro, pound. We've got used up area of supply in 3 months, bearish impulse, pink candle over there. Price trying to drop all the way down to the monthly area and the weekly areas of demand. Longs will be possible down there. Confirmation for longs, but this area of demand here is pretty poor. Look at the strength of the impulse. Only shorts are allowed right now on the way down. Euro yen, another tricky scenario, same as last week, only this happened this week, so we have the same scenario. We have monthly average demand, 3 months average demand in control, weekly average demand, which is already tested, used up, fully penetrated, and we have 1, 2, 3, 4 bearish engulfing patterns. And now on the daily we have 1, 2, 3 bearish engulfing patterns. So no longs allowed. We need at least this out of the way, at least one engulfing pattern out of the way in order to think of longs. We need a really strong area of demand in order to go long over there, because the monthly has been fully penetrated, so has the weekly area of demand, and we have various engulfing patterns and weekly downtrend attacking this tested, used up weak area of demand on the weekly time frame. That would have been a nice short, but perhaps did not with these confluences against the used up area of demand on the weekly, but it didn't pull back. So waiting for something more clear. On the EUR/NOK, we have an area of demand that has been confirmed here. We've got a weekly area of demand where longs will be possible again, and now the daily here, we've got a new area of demand on the daily as a reaction to this weak area of demand on the daily. But look where it is. Okay, there. Price is dropping, dark cloud cover, and waiting, expecting that to happen. So this is a daily area demand, but it is a weak, not 2 ERCs. I don't think it's even 2 to 1. The 4 hour area demand nested within it is not 2 to 1 either. So we've got here potential downtrend on the 4 hour, attacking this tested area of demand on the daily and the weak area of demand on the daily. Long higher probability over there. On the Euro Kiwi, we've got monthly uptrend, 3 months uptrend, longs and monthly area demand, confirmation for longs on this weekly area of demand, but this daily area of demand is very weak, and the next is 4 hour also. So no certificate longs over there yet. So longs lower at the weekly area of demand and monthly area demand. As you can see in the monthly, we are in the middle of a retracement right there. Price bearish pink candle, price is trying to do that. So going along there in the middle of that bearish impulse is not a good idea. Pound dollar. We've got 3 months downtrend attacking this tested area of demand. Monthly downtrend, weekly downtrend, short will be possible again at the weekly area of supply. In the meantime, contractual lows were possible on there, but no retracement happened. Pound Aussie, we have 6 months, 3 months, and monthly supply zones in control for shorts. Any area of supply happened over there, but no retracement. Tested weak area of demand with a weekly bearish engulfing pattern, and on the monthly potentially being created. This could, if this 4 hour weak area of demand here starts reacting and rallies higher, then that will mean that the bearish engulfing pattern in the making will be undone, because the candlestick on the monthly hasn't been closed yet. Short would be higher probability, counter trend over there. Right now, nothing to go long at on this one. Pound CAD. We have the monthly downtrend used up, bigger penetration expected, happened over there. And now we've got the weekly bearish engulfing pattern plus daily area of supply in control. Short any area of supply, but nothing to go short at yet. Waiting for a more clear scenario with strong bearish impulses. Pound yen. Look at the dailies. Been doing nothing this week, so the same analysis applies from last week. We've got a monthly downtrend, short and monthly and weekly areas of supply. Confirmation required right there in the middle. There's nothing to set and forget, so confirmation is needed. Pound Kiwi, 6 months area, 6 months area of supply in control, monthly supply area in control, short and the areas of supply, but no supply happened over there. We had the engulfing pattern on the weekly and on the daily for more aggressive short if you are a more aggressive trader on that 4 hour area supply, but not too clear right now. But short bias, why? Because we have monthly supply, weekly supply in control, 6 month supply in control, weekly supply, monthly supply in control, sorry. Look at the strong bearish impulse that reacted to the weekly and monthly areas of supply, so expecting price to drop further. Short, if anything. Kiwi dollar, 6 month downtrend, 3 months downtrend, bearish engulfing pattern, confluence, monthly downtrend, supply in control, new supply created. Short will be possible again at weekly areas of supply. Kiwi CAD, monthly downtrend, monthly supply in control, trend line and 20 MA confluence, weekly downtrend, but like I said in previous weeks, very tricky price action, so look at that. Compressed price action. This is very, very unclear. Nothing to do with clear areas of supply. It's like if we go back in time, we can here, if we eliminate that area over there, that area over there, that one over there, then we go back in time by using the replay functionality on TradingView, then we can say, as we were saying a few months ago, monthly downtrend, shorts, and monthly area supply. But now that monthly area supply has already been tested, hit that area over there. Going to recover the objects. Well, they are gone now. Well, and that area over there. Okay, well, monthly downtrend, trend line confluence, everything down. So shorts and areas of supply, but there's nothing clear. QBN, we have 3 months area of demand in control, waiting for a bigger retracement, not only because of the 3 months area of demand is in control, but also because we had a very strong sell-off on the monthly, sorry. So after very strong drop in price, expecting price to rally all the way up to the original move. On the weekly, we can see that happening already with these bullish pink candles that almost hit the weekly area demand, which is right at the bottom. Weekly bullish engulfing pattern, daily demand zones created. So longs going to trend on the way up to the monthly weekly areas of supply, where shorts will be possible again. On the dollar CAD, we have still the monthly area of supply in control, fully penetrated. Longs will be possible again at weekly areas of demand, a monthly area of demand like this one, but price is not yet there. We've got this daily area of demand in control, but this daily area of demand trying to play out a little bit. But look where it is, right within the weekly and the monthly supply zones. So we've got a bearish engulfing pattern. So this is a traffic light that is telling us, hey, no way you should be looking to go long here. Okay, so expecting price to drop lower. We've got the 4-hour out of alignment with new areas of supply created. So short on the way down, longs lower. It requires at least the weekly demand or high time frame confluences on the weekly or the monthly. On the dollar yen, we've got the monthly demand in control, bullish pink candle, high wave candle over there. We had the weekly supply in control plus 2 bearish engulfing patterns. We were looking to go short there the daily, but price did not pull back. Swiss franc versus the dollar. Monthly downtrend, supply and control, trend line confluence, 20 MA confluence. It fell short by a few ticks of retracing to that daily area supplies confirmation of these confluences with the monthly in a downtrend. Chinese yuan versus the dollar. We have a 3 months uptrend, demand in control, monthly uptrend, demand in control, weekly uptrend, set and forget long playing out as explained previous analysis, weekly area of demand playing out, and another weekly area of demand, price did not pull back, when longs will be possible again. Indian rupee versus the dollar, 6 months, 3 months, everything in an uptrend. We have the monthly demand over there. After a very strong rally, we need a bigger retracement. We have tested areas of demand on the daily. So, and on waiting for a bigger retracement. These levels could be easily eliminated if the bears gain or take control. Weekly overextended. We've got one pause, another one. So expecting price to drop further, confirmation on these areas or longs lower over there. Counter trend shorts could be possible, but not yet, because the daily is still in an uptrend. So in order to go counter trend short, we need at least on this weekly sequence, we need the middle time frame out of alignment. On the monthly sequence, we need the weekly out of alignment, or at least overextension, and then the daily out of alignment. We have overextension, but the daily is still in an uptrend with this area of demand playing out. This one was not a valid trade because it was not strong enough. This one was. This one is just, you can use to hold your trade. The 3-to-1 was already reached. Maybe price rallies over there, and then you move stop loss over there. If you want to hold the trade, you move the stop loss over there, or just close the trade now that you see overextension. Or just leave it and then risk this, just in case price keeps on rallying, which could happen. Price action on the weekly is not good. It started with several ERC candles, then one ERC candle, high wave candle, one ERC candle, and then now, as you can see, the candlestick bodies are smaller, more and more narrow than before. Norwegian krone versus the dollar. Monthly uptrend, longs at weekly and monthly areas of demand. We've got this daily area of demand that is trying to play out. If you are long on this more aggressive type of trade, which we are in the middle of our retracement, and we've got the weekly bearish engulfing pattern and the pink candle on the monthly, you should be managing your stop loss aggressively because price could drop all the way down. Singapore dollar versus the dollar. Monthly uptrend, demand over here has been confirmed after consolidation away. Supply on the 3 months and monthly were eliminated, overshot, which could happen also on the dollar index. We have a very similar scenario, okay, and those have been overshot already on the dollar versus the Singapore dollar. And it could also happen, let me remember, on the dollar CAD. Okay, fully penetrated monthly supply zone over there, no supply on the 3 months. So it's a very similar scenario. So this area has been overshot, faked out, and now we're waiting for a bigger retracement. The daily area demand is in control. If you are long within these areas, then manage your stop loss aggressively, because look who's coming. Bearish engulfing pattern, trying to drop even farther to weekly area of demand where longs will be possible again, together with the weekly, so monthly area of demand. South African rand versus the dollar. All-time highs broken on all time frames. Obviously, if it happens on one time frame, it happens on all of them. And here, very strong rally, counter trend short could be possible on the way down. We've got the dark cloud cover on the weekly. No set and forget longs over there. Longs will be possible lower at these areas of demand, or after a bigger retracement. We've got this price action getting weaker. It could continue to rally higher because this many times happens, but we're waiting for the bigger retracement for longs. And the major indexes, they are all the same. 6 months, 12 months areas of demand have gained control after the coronavirus effect, or what they call, well, I call that, it's not obviously caused by the coronavirus, but it's caused by fear of the investors getting out of the trades, and just psychologically it's very hard to stay in a trade where everything or everyone is saying that the market's going to crash. So we've got 6 months area of demand almost in control, 20 May confluence, so longs are near the demand. We require confirmation that this area of supply possibly is going to be eliminated, or price is going to continue all the way up to the monthly area of supply where shorts will be possible again with these high time frame confluences. So let's see how price reaches that area, but because look at the 6 months. This is a bullish candle from last year, the second half of the year, and look at this one. We are right now, it's April. We still have 2 months left for this 6 month candle to close. That means that this price action could end up like this, the bullish candle, and then these, if price continues to rally, it could end up like this. So it's not a good idea. I mean, it's not good for short at the top. We need confirmation to go short at the top, because this could happen. Let's see what happens. Long-term bias, longs are near the demand are being created in the 4 hour and all that, and on the daily. So longs is the only way to go right now, confirmation for shorts. On Nasdaq, we've got also 6 months area of demand in control, monthly demand in control, and this area of supply is fully penetrated almost, which is what we are expecting on the S&P. So longs on S&P stocks, lots of stocks on the New York Stock Exchange and Nasdaq are creating same patterns. So long is the way to go. Dow Jones, same thing, expecting that weekly area demand to be eliminated with 6 months area of demand in control, and a lot of room for price to keep on rallying. Bullish impulse after very strong sell-off, waiting for price to retrace to the origin of the move. And on the Russell, we've got 3 months, 6 months, and monthly demand in control, weekly demand in control, so longs all the way up. Confirmation for shorts, short higher than monthly supply zone. DAX index, 6 month demand was overshort, and so was the 3 months, and the monthly was completely eliminated. So now, after a very strong drop in price, bullish engulfing pattern, daily wow longs of the monthly average demand for counter trend longs. 4 hour average demand with bullish gap and failed, didn't retrace on that one. FTSE, 6 month demand in control, longs if new areas of demand are created. We've got areas of demand over there, but no retracement. Short will be possible again at the monthly average supply with 3 months and the monthly in a downtrend. Nikkei, we have 3 months area demand in control. Look at the monthly demand in control as well. Kiss the level and rally no short within here, not even there. So daily area demand is confirmation of the monthly area of demand, not retracement, expecting price to continue rallying and create another area of demand on the daily over there. So longs right now are only possible. The Australian index, look at the strength of the bearish impulse on the weekly and the monthly. So going short here, there, not good. Daily area of demand created, longs all the way up. Hang Seng Index, 3 months, 6 months area of demand in control, monthly demand in control, longs and near of demand, daily demand over there, but no retracement. Show longs all the way up, show confirmation for shorts on the weekly. Nifty Index, 6 months area of demand in control, longs and near of demand. Aggressively here is a small time frame as confirmation on the 6 months area of demand, but worth trying. It didn't retrace. Price rallying, longs and near of demand. On Bank Nifty, with a similar scenario as the previous one, but this one did retrace with a 6 months area of demand in control. And look at the strength of the bearish impulse. We are waiting for the correction to the origin of the move, so longs on their way up. 10-year notes, futures, everything in an option. 3 months, 6 months, monthly demand over there in control, new monthly area of demand, new weekly demand, area of demand where longs will be possible. Again, we had a 20 EMA confluence over there, bullish engulfing pattern, new area demand, but very strong, but no retracement. Ideally, we want that out of the way or a bigger retracement for longs. Crude oil, we've got the 12 months area, 6 month area of demand in control, also the 12 months area of demand. If we clean this, then we've got demand over there, still not overshot. We've got another one at the bottom. Why is there a demand zone? Because we've got trail and break, full candle, all there. So that is the one area that is right now in control on the 12 months. So we're going to leave it like that. And on the 6 months, we've got a downtrend. So is the 3 months and the monthly. Short up there. There was a daily go along with a weekly bullish engulfing pattern that would have been a loss this week. Was worth trying, but it didn't play out. Crude oil is going to probably start rallying strong soon. When? Well, we don't know. But we've got some, quite a few stocks, oil-related stocks that have strong 6 months and 3 months areas of demand and control, even 12 months area of demand and control, like Exxon, Marathon Oil, and the like. So it is very, very, very low, very cheap, and I'm sure many out there will be buying for long term here, accumulating, expecting price to rally higher, eliminate this weak price action on the daily and the weekly, all the way up to the top. So longs with new areas of demand are created, no shorts allowed right now. The gold, look where we are. Remember, okay, 3 months supply within bearish engulfing pattern on 6 months at all-time highs. It is very, very expensive. And we have a monthly uptrend, kissed the level, rallied, and now we've got a weekly uptrend, but the weekly area of demand here is not 2 to 1. Only 1 ERC, and look at the bearish candle over there, the doji, gravestone doji. So confirmation for shorts, no longs, so don't forget. This is the natural gas. We've got 6 months, 3 months demand control, very, very low price, very cheap. New area of demand created, trying to play out, but this is not a valid trade. Similar areas of demand on the daily have been eliminated on the way down as confirmation. So this could have been, this is the strongest one with 3 ERCs, stronger than this one and that one. But in hindsight, everything is very beautiful. Everything works. But we don't trade in hindsight. So waiting for a daily uptrend on this one, ideally, and these highs over there broken. Ideally, we want a weekly bullish engulfing pattern, monthly engulfing patterns, which is in the making, which is good. So if you are a long-term trader, you should be long already, obviously. Long-term trader, longs already. It doesn't really matter. You would have a protection much lower, or even no protection. I mean, this is quite cheap if you can allow yourself to buy these futures, or even a long-term option. Okay, very long-term option. Why? Because this is at $1, $1.50. So it has a lot of potential for price to reach, at least to double, triple your risk minimum, or even much more if price starts rallying much higher. Bitcoin, we have the monthly area of demand in control for longs. Longs are near the demand on the daily, but we are having daily average supply instead. Very weak, because look at that. Only 1 year C. No short confirmation of anything here, because we don't have any confluence of that. We need higher rally into this confluence. But the high probability shorts, high probability would be that weekly area supply in the weekly sequence. But since we have the monthly area of demand and 20 MA confluence on the 3 months and 6 months bullish engulfing pattern in control, long is the way to go. And that's everything for this analysis. Enjoy the rest of the weekend and stay safe, my friends. Have a great weekend. Bye bye. Be happy.